Welcome, everyone. Glad you're here. We're looking for what stock to trade, what currency to trade for this week, starting November 1st. I'm Gordon Scott, CMT, and let me give you three ideas really quick. In order to probably take the advantage of the most high probability opportunity for this upcoming week, it's probably just simply buying Apple stock, AAPL. But if you're interested in a real adventure, then there's another stock called ABVC that you might want to know about. And then as far as currency trade is concerned, you're probably going to want to look really closely at the US dollar Japanese yen pair. I'm going to go through all three of these and talk about a few things to recognize in the next 60 minutes before the US markets open. And hopefully you'll get a lot of ideas. You'll know, of course, I'm not a licensed financial advisor. I have some ideas that can help you in your due diligence. You have to take your own risk at trading. But all that being said, let me share my screen and we'll get right into it. I like to start off with each week how the weekend is shaping up, because if you compare the Nasdaq futures and the Australian dollar Japanese yen pair, those two are highly correlated usually over time. They kind of go in and out of correlation, and they went out for a few months, and lately they've been kind of coming back into correlation. And right now you can kind of see an example of what I'm talking about, how they both have just been in a range since the week began. And these are 5-minute charts. Nasdaq on top, Aussie yen in the lower panel, and just in the past 5 minutes, we've seen the Nasdaq futures drop. I mean, these aren't huge drops or anything, but it went from about 0.05%, 0.32 to 0.27. That's what that size of that candle is, just to give you some idea of the scale. So the Nasdaq drops, but the Aussie yen, it dropped too, but see, it didn't drop in quite the same way. It didn't like break out the lows and kind of head down strongly lower like that, right? Still going down, in fact. And so what does that mean for where they're both going? Well, you can't always know for sure, but we look for opportunities from the times that these kind of diverge and snap back together. So here's what I'm talking about. We go back here to 1820, 1815, in this area, see how this dropped down, and they both did, through that next hour or so. And then kind of went sideways, a little bit more fluctuation here. Here's the Aussie yen taking off from 1930 to 1955. We got 1930 and 1955 there. See, there was a run up in both of them, and then they're both kind of heading down. And so you see, this basically the shape of these movements is staying highly correlated, right? And so what you're looking for are, when it's highly correlated, what happens if these things diverge a bit? And see how this, let's see where it is, 2340, and yeah, right in there. See, this one kind of goes down mildly. This one goes down sharply, but then starts coming back up here at about just after midnight Eastern time. This move here, 1230, we'll call it. And then this one goes down. So these two right here, I mean, we get all the way to about 150. Where do we get here? Where's 150 here? Yeah. So they're kind of doing opposite things right here, right? And that one goes down. And when you see that sort of momentarily diverge strongly, then something's got to give. Something, they're going to have to sort of snap back into being close to each other. They don't have to, but oftentimes they do. That's the opportunity, right? So here, as you can see, the Nasdaq is continuing to go up. Get to this point where it drops down but comes right back up. And this signal right at 2 o'clock is important, because it says, Aussie yen's dropping, Nasdaq's going up, and all of a sudden Nasdaq starts to drop. Is it going to go snap back and catch up to where the Aussie yen's been dropping? No, because it comes right back up here at 2 o'clock, jumps up, right? And then what happens here at 2 o'clock? This one jumps up, but notice how it jumps up. This one, just like, okay, we're back to where we were. This one has been going down and it jumps up in a sort of trend changing kind of shape. So what you got here is this moment of a tell that says, okay, we are more likely going to, the Aussie yen is going to come and catch the Nasdaq. So you have this opportunity. You don't, of course, you don't know for sure what's going to happen, but look what that does happen over the next hour or so. You get the Aussie yen going from here up to there, and the Nasdaq futures do something similar. They both trend up, and even this, when it comes crashing down really hard, like, oh, forget it, just kidding. Well, what it does the next few hours, it comes up, right? Now, we've got that situation going on right here. We've got the Nasdaq dropping down strongly, and the Aussie yen hasn't really done it. So we've got from the 5 o'clock U.S. Eastern time hour going down until now. I'm sorry, that's not Eastern time. 5 o'clock is my time, Mountain time. So we've got this dropping down, and this thing kind of going up, but then starting to curl down. So what are we looking for? What we're looking for now is the idea of whether or not the Aussie yen is going to sort of turn this general upward trend into something down, in which case they're both going to go down, or is the Nasdaq going to turn around and catch up and come back up to catch up with the Aussie yen? Very important question. We're going to watch over the next hour. We'll keep coming back to this to see how it shakes out, because I feel like if it's the case that both of these start downward trending, then it's probably going to signal that the Monday in the U.S. market is going to be a down move. And that would be a little interesting. I'm not expecting it to be a down move. I would expect it to continue going up. And I want to show you why I expect that. But what we're going to look for in the Aussie yen and compared to the Nasdaq futures is how ready are people to take on new risk, or are they done with new risk and they just want to take profits, lighten their positions, whatever. And when I say people, I'm talking really more like institutional traders and buyers, because at this hour, the more aggressive of the institutional buyers and traders, that's who's messing around with the Nasdaq futures and the Aussie yen. People that like need to get their positions in before they're going to make their bigger moves as the U.S. market opens. All right. So with that in mind, let's make sure that I've got the right screen being shared in the right place, because yeah, okay, so let me bring the charts up to talk about why I think Apple is probably the best, highest probability US stock trade, and why I think the US dollar Japanese yen is the strongest currency pair trade opportunity. All right, so first off, in the US stocks, the way we ended Friday was, a 3-month look back at the sectors looks like this. Energy has had this big run, but it's really flattened out and maybe even started to sort of head down a little bit over the past 2 or 3 weeks. We've got discretionary moving up strongly. That's mostly Home Depot. And we've got finance doing something similar to energy, sort of flattening out and heading down. And then we've got technology doing this, coming up on the rise. Now, part of this has to do with the fact that financial stocks right through here were what opened earnings season in the US starting a couple of weeks ago. And so people got really excited about finance companies, and they're in the news, but the news is all done and it kind of played out, right? And in anticipation of that, people were buying up shares, and then once the news came, they kind of stopped and they sold. Technology has, the big technology names had their earnings this past week. There's still a couple more to go, but most of the big names are already done. And so I think that the markets were rising up in anticipation of that a little bit. And now you've got a few more discretionary names coming on. So XLY, the discretionary sector, might be a more interesting place to keep looking. However, let me show you this one that's really kind of, to me, it's a surprising situation. So here's what has happened as a result with the major indexes. So the S&P 500, there's its old high, and this last week, what did we do? We broke out, right? Here's the Nasdaq 100. Just Thursday and Friday, we did that. Breakout, retest, and reestablish that breakout to stay. The Dow Jones Industrials, the blue chips, we broke out a little earlier, but again, retested last week, and we're there to stay. The small cap stocks came close, hit resistance, and have yet to stay broken out into a new high. So they're lagging behind the other three indexes. And this is probably a good explanation for why the Aussie yen is not looking as strong as some of the other pairs. Aussie yen and small caps, kind of think of them similarly in the sense that they're both risk-taking instruments. The people are looking for kind of big moves, big opportunity, and so it's the same attitude of you're chasing those dollars, right? So okay, but we don't have a lot of risk taking, but we do have people trying to take risk in more, I don't want to call them safety, but large cap growth oriented, safer kinds of trades. So that being said, once people feel more comfortable about the markets, will they plow into bigger growth opportunities like the small cap stocks in IWM? If they were going to, the first place they might consider, or the first place we might see it, would be in the way this stock is about to respond, ABVC. So in the pre-market, this stock here is, which closed at 254 on Friday, is now trading up around $8 a share. Yeah, it's going to gap way up, and the bigger question, so we can't get that, we can't jump in and buy that jump. The bigger question is, what's it going to do next? What's it going to do after that? So I've got this volume chart stretched way out here, so you can kind of see what volume has looked like over the past little while for ABVC. We're in millions of shares. This here, September 1st, 53 million shares traded hands. And what did the stock do? It jumped up from where it closed here at 286 to $4, but then kind of sold off, right? Clear back here, it was up around $5, but now we're up around $8. What's going on? Well, if you go here and look at this article on Seeking Alpha, you've got a list of things. Now, this was just recently put up, so it's not. I mean, it's put up about 2 hours ago. It's up over 400%. Because people are interested in it, because somebody put out something on stock price. I mean, that's okay. What? Why? 3.7 million shares have changed hands, double the 65-day average. So even before it's come out of the gate, double its normal volume is trading in the pre-market. Okay, so that's a pretty good example of a stock that has a lot of buzz around it, and is likely to have a lot more trading. The question is, are people just going to jump in and take their profits, or are they going to keep buying it up? So this clinical stage biopharma company is advancing therapeutics, has 6 drugs and a medical device in its pipeline. In September, it announced a joint venture with a Tokyo firm. Well, that was probably the big volume spike that we saw there, right? And that announcement only doubled. Whatever's going on now is quadrupling the stock. And what's interesting is that it isn't, it isn't driven by some sort of announcement that the company made. Maybe they're going to be making one. Company shares surged in reaction to the submission of 2 new patent applications for an active ingredient for candidates targeting MDD and ADHD. Okay, so does knowing what they do help us know whether or not the stock is going to keep going higher? Not at all. Some people like to know kind of what's behind it, so I wanted to bring that story up just so you know what we're talking about. This biopharma. It's really weird that the idea that somebody puts out, hey, this stock's interesting, and then people just all jump in, double its movement, and it's up $8. It's much more likely that there's going to be some announcement here before too long that that will precipitate why it's going up. If we were to search around out there, we could probably find more information about the reason why people think they need to jump in, but maybe not. Maybe it's just, the next new meme stock that kind of has captured everybody's attention. So here's the question. It's 3 million shares being traded, and that's going to be a volume bar that's so far, right? Looks to be about right there. So that's significant. It's not, and that's just pre-market trading. By the time we're done today, we could see a bar that's definitely higher than that, maybe even higher than any of these. So the big question though to ask is, would a stock like this, jump up this high and then keep going, or is it going to go up and just try to come back, into this level? See how persistent the price was in that range for a long time, right? See, it's been there before. It's been up to $8 a share here on this day when they announced earnings, and that was back in May, right? So let's see, the earnings were, yeah, I don't know. There must have been something they said that got people excited because the numbers didn't come in some sort of surprising way. Anyway, see what happened here was stock opened at 4, ran all the way up to, I don't know, I gotta switch my scale here. Okay, we're getting this, ran all the way up to $30 and then came back down to 5. Okay, so if you heard about a stock that traded at $30 a share and then within the same day crashed to 5, you would think that was devastating. Now this might be just some sort of data error. It might have been a spike up and back down, but TradingView doesn't usually have those. I've seen other websites, not websites, data feeds that get those sort of spikes, and you can't tell whether they're just some aberrant trade or a true actual trade in print. And TradingView doesn't tend to have those because they I can't say exactly what their process is because I don't know if they scrub their data or whatever. All I know is that if there is a spike on TradingView charts, it's a little more likely to be something that was actually a persistent print and maybe even more than one trade. So the cautionary tale here is, hey, what if we start off at 8 today and then we just drop down, right? Because that could happen. And so when you're looking at stocks like this, you have to ask yourself, I don't have any reason to know for sure what's going to happen next. And so what is my strategy going to be if in fact this trade is just a widowmaker, so to speak, just a real, it's going to jump up and do nothing but come back down. Do I think there's enough reason to give it a try, right? So first off, the answer is you need to start small if you're going to take this trade. Now, I don't particularly recommend jumping in and doing this with ABVC, but I do think that there's something here. We've got a specific strong volume. We've got a pharma play. We've got social media all, drawing a lot of attention to the stock. We've got the fact that the stock has had in the past a lot more volume, a lot more people could trade this thing. There's a couple other stats we'll try and look at here with ABVC in a second, but I just want to look at the chart and sort of help you recognize, what do I do with a stock that could be explosive and have a move, but might be explosive the other way. Well, okay, the answer is you make a plan for how much you think the stock could fluctuate and still have an explosive upward move. And then you say, how do I, plan to stay inside that range? What I really want to do is see whether or not the amount of risk I have to take is smaller than the potential for the stock to keep going, right? A couple of ways to look at this stock that would help us with that decision. So, yeah, sorry, I'm trying to decide whether to put this into a, I'm just going to keep it here on a daily chart. What I'm going to talk about right now, I'm going to show some lines, and I'm really talking about intraday action, but I'm leaving this on the daily chart just because the scale of this chart is so kind of, whacked out. So I'm going to create a couple of lines here, and then I'm going to move them around so we can discuss the potential trade setups that we might see. We'll change that one to blue. I always like to do, when I'm doing these kinds of things, blue is my entry price, red is my stop loss, and green is my profit taking target, right? Okay, so let's consider this. If I were to buy that stock at the open, right? In fact, let me see what. Yeah, see, we're up to 835 right now. All right. If I were to buy that stock and have to get in at whatever the market price was, 835, 841, somewhere in there, what would I have to put up with in terms of potential fluctuation before I could believe it was going to go higher, right? And so I think that the answer to that question is this old price range right here at $5. I think you've got to allow the stock to fluctuate all the way down to $5. We could see tremendous amount of price move. It could go, open and then just drop, and if it keeps dropping and dropping and dropping, will it find support? Well, the last time in recent price memory that it traded was $5. So you kind of have to allow the stock to go that far. Now, that being said, I wouldn't be interested in holding that any more than 20 or 30 minutes. If it came down for the first 20 or 30 minutes and came to that level, but within that 30-minute period of time wasn't on its way back up, well, then that would be enough for me to say, I'm out of here. Now you could say, I'm going to buy this thing, and if within the first 5 minutes it's down, I'm out. I mean, I got to buy, and within the first 5 minutes, it's got to get going up, right? Because what I want to see from this stock, I want to see this thing go back to 30 or higher, that spike where it was. If I thought that we could go from 8 to 30, that's like, 400% or almost uh, before. I mean, from now, not just from yesterday, right? It could that would be fantastic if I thought it was going to do that, right? Well, it seems unlikely because we've got 3 million shares in it already, and we've run it up to, well, it's actually still going higher, 842, 863. It seems unlikely we're going to get to 30, but if we were, that would be a whole lot more than this $3 risk I'd have to take, right? How about just 16, just doubling? Could we get there? If I thought we could get to there, that's still better than, the $3 risk I would have to take. So that's kind of the thing you're looking for, is some indication of whether or not this stock can really get up and keep going much faster than where it stopped. We had stocks last week that did that, special acquisition companies. Um, and they did well. The first one did, it opened and then flew higher. The second one, we were talking about it last week, BENE. See right there, right? This is what we're watching out for. So the first one happened where it made this big jump, and then this one kind of did something similar, but then came back down. But then the next day, which, yeah, that was last Monday, right? I made mention of this stock, and I said, you gotta be careful, because if you get in and it does, well, this, right, that's terrible. You don't want that. So we're looking at this biopharma ABVC and asking ourselves, is this just gonna do that thing right there, right? Well, there's two differences. One, this one already kind of had its big volume day the day before, and then the next day was, coming up. Well, by the end of the day, it hadn't even traded with that much volume. So you can see what it was. People, jumped in and then hoping that there was going to be a new lightning strike, get to the old high. Well, just didn't happen. So whenever I see these kind of big gaps like this, I sort of like to just say, all right, halfway gap, whatever that is. In this case, it was, well, we closed here 11 to 17. Then right about there, 14-ish. If the price comes down that far, I'm out. I'm going to get out. Let's look at the 5-minute chart and see. You can see for yourself what the initial movement was right out of the gate on the 25th. That's Monday. Okay, see how just within 5 and even 10 minutes, all we were doing is going down. And by that point already, we had hit the halfway mark. Yeah, it's true, it jumped up, but didn't stay. See, if it's going to keep going, if for some reason there's that opportunity you're looking for, you shouldn't even hit that halfway mark. Certainly shouldn't hit it in the first few minutes. So that's a really simple litmus test for us for ABVC. This stock doesn't trade with nearly the kind of fluidity that we saw on BENE. You can see this, right? These these are kind of spotty price moves. It's not going to be that way today, because the price action is going to be so much stronger, and the volume is already more than double in the pre-market, which is kind of an amazing volume move. So I think we're in for some real volume fireworks today. The question is, what is that volume going to do? Well, because we didn't have the big move already, because this is kind of just the beginning, it's possible that what we're seeing is something that's going to draw a lot of attention and then move it up even more strongly, and keep going, at least for the first little bit. So again, how would you trade it? All right. Well, as I said, I think the answer is that you find a plan, and your plan has to be, what am I going to try to do here? Am I going to try and um, buy this thing and hold on to it? Well, in nowadays environment, that's not a good idea. Why? Because people aren't trying to come find huge risk amounts. The small cap stocks, they're they're not. I mean, more people are interested in large cap stocks. Okay. So I think that the plan has to be to just get a quick profit. Um, how much of a profit? So I feel like you got to put in $3 worth of risk. And it's for this kind of stock, you would hope that you got more than $3 to the upside. But if we're going to get more than $3 to the upside, about the only way you're going to do it is to get that within the first few minutes. Notice here that that stock, was up at 830, 840. Now it's already back to 820. So even in the pre-market, we've got some people selling to start. So I think that the easiest way to make this trade is to say, I'm going to buy wherever I can somewhere here, and assuming the eights, who knows where it'll actually be in another half an hour, but wherever it is that it opens, I'm going to put a stop of under $5. 480, 480 something. It's probably a good level. That's your stop. And I'm going to buy small enough price that or small enough number of shares that if it drops, I'm not going to kick myself out of the trading game, right? I'm not going to load the boat, put all my money into this trade, and keep my fingers crossed. I'm not going to make a trade that way. I'm going to make a trade where I say, all right, how much, if I lose $3 per share, how much would I lose? And that amount that I lose, will I be okay with coming back and trading? Now, that amount is usually about 1% of your trading account, whatever you're looking at doing, or whatever your account size is. That would be the maximum. Okay, real quick check. The Aussie yen, or the Nasdaq, came down, found some footing, and turned around. Notice that the Aussie yen never did break that sort of trend and turn down. And in fact, it has made a stronger bounce up. So these two are staying correlated to each other, and the Aussie yen is leading to the upside. I think that's a little bit of a clue of Australian dollar strength, but I think it's also a signal that probably we're going to see some buying happen out the gate in the US stock market. So back to ABVC, is it possible we'll see some new people wanting to come in and buy here? Yeah, if I took $3 risk, the easiest thing here is to say, take $1.50 profit. I think the easiest trade that you could make would be $3 stop loss, $1.50 profit. Within the first few minutes, boom, you probably take that profit, right? However, what if all of a sudden it jumped to $1.50 and then just kept going, really hot? You would hate to take that $1.50 and miss the possibility for how high it was going to go. So it might be that a better tactic is you set a $3 stop loss, and you say $1.50 is my mental price target. That is to say, I'm going to watch what happens. Oh, it's $1.50 would be $9.50. Is that right? I must have a logarithmic chart going on here. No, it says regular. It's kind of weird. So that's, yeah, I don't know. For some reason that looks like a whole lot bigger than twice compared to this, but whatever. So if I were to, oh, I see, because I don't quite have, it's more like that. Yeah. All right. So imagine I get in here and I watch and say, if it hits $9.50, $10 in that range, then I'm going to move my stop up to break even. and all of a sudden it flashes down and takes me out of the trade, well, at least I broke even, you know. But if it keeps going and it goes, flying higher, then I'll be able to see that. Now, will I know when to take profit up there? I won't. I just gotta see. I mean, I'm gonna see it spike and come right back, and then I'm gonna get ready to just take it wherever that spike comes back from. Um, Assuming that's the price action we see. But the kind of the point I'm trying to get to here is if I create a plan, in this case, I'm going to risk 2 to make 1. And that gives me a 66% probability that I will see a winning trade. Just that alone is the plan, right? Well, it's true that I'm risking a larger amount. So if I lose more than I gain with this plan. But the plan includes this extra step of it's a mental target, not stop loss, but stop profit taking target. The mental profit taking target, where that is to say, if the price jumps, I'm just going to watch and see what happens, and then mentally or manually adjust my behavior based on what the price is doing. And so I think I'm going to actually try and do that in a paper trade when the moment comes, just so that I can show you what it is I'm talking about. So we've got that price going back up. We're 841, 856. So, I mean, if you have the ability to trade in the pre-market, then you could buy those shares. And I wonder if, in fact, that's available to. Let me see if I can. Oh, yeah, for some reason when I'm. No, here it is. Okay, good. Worked this time. ABVC. Let's see what comes up. Yeah, we're clear up to 10 million shares now being traded on ABVC. That's pretty significant. Yeah, that's pretty significant. I wonder if this thing would give me the ability. So this is actually a live account. And do I have the ability to do this in market? Yeah, EXT. And I'm going to see about just buying 1 share here, just so that I can see whether or not this order would go through in the pre-market. Yeah. So in this account, if I wanted to buy 1 share of this stock, I could buy it right now. I won't have to wait until the market opens. And so you have to have a broker that would allow you to trade in the pre-market, but it could be done. That's what I'm trying to say. And then with that much volume being traded right now, and the stock moving back and forth, it's not actually a bad idea to go ahead and trade this one pre-market, but you would still have to have the same plan, right? So let's go look at the ABVC chart. Zoom in there. All right. So this is what it's done already. Oh, wow. Yeah. It has been much higher. 26. Kind of a spike up, but this wasn't a spike. This is a lot of people getting into it, and they're 14 and a half. Okay. Well, that gives us a pretty good indication of where it could go. Now, this thing dropped from 14 down to where we are now. And notice how that volume, this huge volume came in at 5 o'clock. Well, we call that 7 o'clock Eastern time. And it dropped the stock from 13 to 8 at 870. Since then, most of the volume has been buying, but it really hasn't moved the price a lot, from 790 up to as high as 9. Okay, so those are some numbers we can work with. Let me go back to my chart and revise my plan here. We have been as high as 14. So if I were to buy this from 8 and see this thing go up, to 14 and higher, because whatever news people decided the stock was worth that much, right? Then that would be interesting. That would be a whole lot more. 8 to 14 is, $6 jump compared to the $3 risk that I would have to take. I love the fact that that's 2 to 1, right? As I said, getting up to this level here, in the high 9s, not quite 10, that has, I think, a high probability of happening. Let's see where we were. Did we make it? We only made it to $9, didn't make it up into the $10. So I think what happens is this thing is really more like this. I don't feel like, you buy here and sell there. That's sure you can do that, but I think what that is, that's the marker of when the trade's really gonna get started, continuing its big move up. If in fact there's a big move up, that's probably the line in the sand. If it crosses that, it could keep going, right? If people thought that it actually was worth more than that, then you'd see more buyers come in. But what we're seeing is that a lot of buyers already said, no, 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 it's not worth any of this price up here. Down here, oh yeah, $5, it was worth that price. And so they kept pushing it up. So this, right here kind of validates my thinking. If it comes back past $5, we don't need to try messing around with it. But we've settled into a bit of an equilibrium here in this $8 and $9 range. So I like the idea of, buying it anywhere between 8 and 9, or 7 and 9, buying it anywhere in there. Let me duplicate that. Okay. So if you get the stock anywhere in there, then what you're looking for is to see whether it goes above 9. And if it goes above 9, the potential is that it could head back up to 14 and keep going higher, because there's some news or there's something fundamental about the stock that is gonna make it move like that. So the risk then is that we come down here. The opportunity is that we go up there. So what is my plan for operating in there? Well, again, that $3 risk and then $1.50 above wherever I manage to buy is my first interesting target. And then I want to see if I can hold on. So, if I buy here, then I'm going to watch and see, does the price get up to here? If it does, move my stop loss to break even. And so if it goes up here, hits resistance, comes right back down to where I bought, then just get out. Say, say, Levy, I scratch trade, didn't make any money. And I don't care if it does that, because then it goes to the moon. That's not my trade. My trade is either I buy it and it just takes off and goes, or it goes up a little bit and comes back and I'm scratch. Those are the best case scenario. Of course, if it comes right out with selling, just right out of the gate, some short sellers come in and say, we're going to pound this. We're going to just dump it, right? Fine. Then I'm going to, $3 is where I say, okay, that's, if there aren't buyers that come in and turn those short sellers around, they got a $3 buffer to do that. So, all right, I've exhausted everything I have to say about this trade. I'm probably talked it to death, but the main thing I'm trying to say is that's the plan. That's the setup. I don't try to predict that I know it's which way it's going to go. I just make a plan to react based on what I see. I also am seeing here, as we mentioned before, Aussie yen has got a little bit of a push, and the Nasdaq was okay, that's going to take a second to get back in there. The Nasdaq was kind of rebounding, But I just don't see enthusiastic buying going on here from the Nasdaq. We've got a little bit of a hold up there. So I think we're probably not going to see the conditions, rabid buyers coming from all directions that are going to move that stock up to $14 and have it keep going, the ABVC stock. So as interesting as an idea it is, I don't think it's super attractive. I'm going to paper trade it just so that we can track it here and see, how it would go. I'm going to put in my stop loss. I'm going to leave my take profit as a mental exercise. So I'm going to put in a market order. And then if I were to risk 1%, I'm going to only risk 0.5% of this paper trading account. Let's see, can I do that? 785 units. Okay. All right. So I'm teaching this class next weekend about supercharging your trading results. And this is what I want to kind of point out. You make a plan. In that class, I'm going to talk about a variety of techniques, one of which I'll tease with right here. And that is, don't put everything in right away. I'm going to put in half of what I would normally risk to start. And then I'm going to be prepared to put more in. So I'm going to go 400 on this. And then the stop loss, well, it's just going to be $3 down from wherever I get in. I'm going to get in at the market. And then I'm going to look to take profit at $1.50. But if the price just is kind of on its way up and going through, I'm not going to take the profit. I'm just going to move the stop loss up. Okay. And then I'm also going to look to see about adding more. I'm adding 400 more shares to it, right? Where am I going to get those 400 shares? At what price? Well, I want to get those 400 shares somewhere close to where I purchased them. But it all depends on what I see in the price, right? So as an example, let's suppose the stock comes down. It drops it down $1 or $2 in the first 5 minutes, but it doesn't go the $3. It finds some support and it starts coming back up. And I say, oh, okay, well, look, if there are buyers here, then I want to join in. Then I might add to that position at the lower price level. It's true that, I could still end up making a loss out of those, but I would be risking less than 1% of my account in doing so. That's okay by me. And in doing that, I would increase my opportunity, because then if it goes back up, then I know, oh, hey, we really do have a chance to make a bigger trade out of this. So if I get back up to my initial profit taking target, I might add a third level, in this case, another 400 shares. So at that point, now my average price is going to be somewhere where I got in, but I'm doing so with the momentum of stocks moving in my favor. So this idea of scaling in is a big way to supercharge your trading results, right? So let's look at, I'm going to put that order on, I'm going to buy at the market. Now 400 shares is assuming I have a $235,000 account, right? If I had a $23,000 account, that would be 40 shares, right? The risk half of a percent. You get the idea. Okay, so anyway, we're going to do that. We're going to throw on, oh, it doesn't let me do markets in the pre-market. So I've got to actually put in something. I'm going to go up to 850. And then we'll say 350. Oh, no. Doing the wrong thing there. 5. There it is. there. Right, that's okay. And we're about 10 minutes away, 50 cents. Hopefully that'll be enough. See, I gotta put that limit order well above what the current price is because I don't know what it's gonna jump up to. So yeah, we're gonna do that. That reduced the number of shares. Notice that dropped down to 336 when I set the trade up that way. Anyway, it's placed and it's got a stop loss at $5 a share. So that part's mechanical. I don't want to be making a decision about my risk. I want to protect my capital and say, okay, if it gets down there, then I don't want to think about it. I want to get out. But if it comes up, then I want to think about it. I want to sort of watch and see and try to react. Hopefully I can do that for you in real time. Now I spent a lot more time on that than I wanted to because I wanted to have a chance to talk about a couple of currency opportunities I've been seeing. So let's look at the US JPY. This over the weekend, I sent the recording in to show, I think there's an opportunity here. You got about 150 pip move and, or sorry, 120 pip move in either direction that it would break. And you've got about a 60 pip risk that you'd have to take to do that. Let's go look at the 4-hour chart and see how those lines that I drew might shape up on a 4-hour. So we did have, we got that, and interestingly enough, right at that line, you saw some selling. Well, it jumped up here, retest, came back up. It's kind of pushing down now, but in my mind, this is a fantastic setup because it's a great opportunity to, like, if you go 114.19 and then you have a 60 pip risk, right? Then a 60 pip risk might be, where 113.19 is going to be about 113.50. So you can come all the way down into this region right in here. 60, and say this is my stop loss. And I actually like the look of that right there because this is about halfway into that pattern. If in fact this thing were going to break out and continue, I wouldn't want to see it come back in to that level, right? If in fact it were to come all the way back down to this level, if it breaks, then that would also be a good place to put a stop loss on the upside, right? In other words, if I went short this pair, that would be my stop loss coming from the bottom going up. But meanwhile, if in fact it continues and breaks the new high, this distance here is the price pattern prediction that would keep going. So, you probably got from in this range, from this line here, 114, you probably got a target of up into the mid 115s over the next week to see that play out to. And so I love the idea of taking a shot somewhere in here. In today's fluctuation, as the US market opens, the US dollar JPY will probably fluctuate all back and forth in this range from 114.40 down into 114 flat. So you could probably pick that up a lot lower than where it is right now. I'd say 114.5, 114.10, somewhere in there, anywhere in there is probably a good range. Or you could just take it right now, whatever you like. The main thing is you set the stop 60 pips lower and you set your target 120 higher. Now that all by itself, that setup is, small amount to a large amount. That means like a 33% probability. So, you pay off twice as much if you get it, but it's a low probability trade typically. Here, I think you're in a situation where you have a higher probability than 33%. You might have as much as a 40, 50% probability of win or loss on this trade. It's just that the payout is so much bigger than the risk. So it makes it for a very attractive trade. I was curious, on Friday, which way would it break out? Whichever way it went, I think is, worth taking the risk. Well, it broke to the upside. So just like I think the US stock market is going to continue to go higher because the breakouts we saw, I think the US dollar is going to strengthen against the yen. And I think that creates that kind of a trading opportunity. Okay. So that's my currency pair trade. And in fact, before I leave, last week I did the Aussie yen. Here's my account history, by the way. No, orders, account history, sorry. Account history. Last week we were talking about the Aussie yen. That one worked out to be a profitable trade as well. We talked about JP Morgan, that did not. We talked about Ethereum, that worked out to be a profitable trade. So last Monday, these were the three trade ideas, and that was the outcome, net positive between the three. This week it's Apple and ABVC instead of Ethereum, and USD JPY. So I'm going to try to put this trade on real quick. Oops. The USD JPY trade will go as a paper trade, of course. Stop loss, 60 pips. And take profit at 120. And I'm going to risk 1%. And that has a really high number of units. That's going to work out to be what looks like 4.4 standard lots with that size of risk on a $235,000 trading account. That's why it comes out those kind of numbers. If you had a smaller amount, then move the decimal point in the number of units, or mini lots on a $25,000 account as an example. Okay, so I'm going to go ahead and do that. I'm going to hit that limit order just a little higher though, because I want to do ask -4. I want to go ask +1. Make sure that fills. Okay, great. So that position is on, and we'll see. Oh, come on, guys, get out of there. That one, that's got started like a little aggressive, jumped right into it, but because I'm running out of time here. Okay. Now let's go back to Apple. Daily. So Apple is coming in at 148, 149, and it closed at 149.60. So it's dropping back a little bit. I like the idea of picking up Apple, but I got to give it a stop loss clear down to 146. So we're going to say I'm going to take the stop, or I'm going to put the stop at $3. I'm going to do a take profit at 150 and 1% risk. There we go. And hopefully that will work out. And then last of all, we're going to do ABCV, which can't trade ABCV at TradingView. All right, we'll go look at doing it here on the Thinkorswim platform. Okay. So, whoops. We are within a minute of trading this. I don't know if I'm going to be able to get this order off. Okay, here we go. Here, what is ABVC doing right out the gate? It looks like it's falling. I'm just going to wait. We'll watch those numbers. And oh, whoops, that's 100 shares. I don't want 100 shares. Okay, yeah, it held. So I'm going to take one share. Did that get put in? Yeah, it did. All right, great. So my setup then is to give it $3 risk. So if it dropped $3, then I would just get out in the first little bit. So let's watch it on the chart now. Let's see what's happening. In fact, let's move away from the. Okay, so we are at $9 almost. This is our critical moment. We want to see, does it blow past $9? Yeah, it did. See, and notice that once it did, it really started moving. See that? See how it's jumping up? We're at 9, we're at 10. Okay, my purchase came in at about where did I buy it? Oh no, I didn't get that. How did I not get that? Ah, because I put in a 7.99. This platform, darn, this platform puts in limit orders. I should have changed it to a market order. So had I got in a market order at 7.99, then that'd have been great. Let's imagine I got in somewhere around 8. This is, paper trading anyway. See, had I got that at 8, then right now I would be looking at not quite. Oh yeah, no, I'm $2 higher. So right now I would move the stop loss to break even. Okay, so imagine that we got a stop loss that is, well, wherever I got in, $8. Now I'm going to watch to see how to decide when to take the profit. I mean, I love the fact that I got that much, but I would hate to see it come back and break even. I mean, just break even if I thought I could figure out a good place to take profits, right? So this is a 5-minute chart. Now I'm going to switch to a 1-minute so that I can sort of see how the price is acting. As long as I've got, a big green bar, I'm not doing anything. I'm not gonna touch it. I think that's sitting still though, because my platform is frozen a little bit from its data feed. Yeah, we'll see if that comes back. So I would have a stop loss sitting at break even, and if it comes running back down, then I'd just be out. Let's go to here. Let's see if oh, that's because I got the wrong symbol. Okay. 1-minute chart. There's the activity. 9:31. Got any news on that? That's acting almost like it's halted. Files for mixed shelf of up to $50 million. Okay, so it looks like they're gonna try to get new financing, and because they've got a big project, so that's their news. And I don't know, that was from a couple days ago. That's not right now. No, okay, nothing new that we can see there for sure. Let's have a look at is Apple moving? Yeah, see, so it's not my data feed that's frozen, it's ABVC that's kind of frozen. I'm wondering if trading got halted on ABVC, because orders were just flying in. Meanwhile, here's Apple. What did it do coming right out of the gate? It dipped and then has moved back up. So that's a nice setup. How about the US dollar, Japanese yen? So these are 1 minute charts. You know, it's trending higher, looking like wants to test that level. So that's not bad. No, come on, buyers. Anyway, hopefully that all made sense to you. Guys, I got to tell you, I'm not really sure why the ABVC is. Yeah, it's got to be that's halted. All right, so as long as I'm still here for a second, let me just talk about this. This thing's going up. I got a stop loss. I mean, if I had the position actually on, I missed it because I put in a limit order and not, you know, triggered the market order. I was thinking that the limit order was going to stay, but at, you know, like 820, and so that when I hit buy, that it was going to grab it, but the limit order was moving up and down with the price, so I put in the limit at 799 and missed the trade. But assuming that I actually had the trade in the position on, what would I be doing if this you know, happened to me, that it had halted? The answer is I'd make sure that I'd have the stop loss put in at where I bought, in this case 799. And now that we got this price coming right back down, that's, you know, that would have me, okay, so we did halt for a little bit, but we're back to it. That's for about a 5-minute halt. People sold out of the halt, but they are still, there's still some buyers there, so that's kind of interesting, right? Yeah. Now, what I want to do here is recognize that if this thing comes up and makes a new high, that's probably where I want to scale in. I probably want to take another chunk. Do I want to add a whole nother 400 shares in this case, you know, on a $230,000 account? On a $230,000 account, that's probably what I do. There's another 400 shares. But on a smaller account, of course, you know, move the decimal, as I say. Now, it doesn't look like I'm going to get that. My guess is we'll come back and get stopped out. If this were going to run up and, you know, make a new high, I would expect it to have enthusiastically done so already. I mean, it still could, but, you know, we just don't have enough buyers plowing in. So I probably want to take profit, get ready to take profit, right? If I had actually managed to buy at around $8 and I was giving it $3 risk, then 950 is where I'd be, you know, happy to take profit. But I gotta do what the price action is telling me, you know, it's going to give. Yeah, okay. Just, I think right there, 850, whatever. I just bail, just take whatever I could get right in there, 840, 850, because it's essentially a break even trade. Well, it's 50 cents. It's not nothing, but you know, it's nothing for what I was hoping for. If in fact this trade was going to go up, I would have expected it to go up. I mean, it'll go up strongly. Then I would have expected to go up coming out of that halt fairly quickly. And this isn't quick enough for my liking. So I feel like that's probably it. I don't want to hang around because I think it's going to start cutting into the $8 after all these people that, you know, we're selling it down and pushing it down decide to be a little more aggressive and start shorting it, you know. So how about oh, Apple's gone down and jump back up, and USD JPY. Oops. Okay, so the dollar yen is now heading in the right direction. So that's both of those looking pretty good. A, B, B, C. Come back and look. Oh, so right when I said bail out, then all of a sudden here comes some more buyers coming in. Well, that's the thing. You make your plan and you stick with it. Over time, my plans that I make tend to make me money, and uh, it's hard to not second guess them when you see stuff like this, but you've got to just say trust in a plan that I know makes me money. Why is my plan making me money over time? Well, because I'm controlling my risk. I don't know where the prices are going to go. All I know is I wanted to limit my risk. In this case, I would have, in theory, my plan would have managed to get me in and get me, 50 cents a share on that. Will it go and take off and keep going higher? We'll see. I kind of doubt it. I feel like stocks that really make that big move, there's just a lot of emotion in there and a lot of people rushing in and panicking in to buy. And that's what makes it, move the way it does. Here we're seeing a lot of back and forth going on. So I got to admit, though, I am surprised that we haven't started cutting down into the gap areas. The fact that it's holding the gap is a pretty good sign. There might be a longer term activity at play with this stock that makes it worth hanging around, but I would still suggest that you got to give it at least a $3 space. All right. Well, uh, gave an extra 10 minutes to this session today. I hope that was useful and meaningful for you. Until we do this again next week, take care and trade well.